Hey Amanda, how are you doing today?
I'm great, Charlene. How are you?
I'm good. I'm good. I'm excited again to talk to you. We are going to talk about the email that you sent earlier this afternoon. Rates are up, but still lots of opportunity. So, how about I introduce myself and then you can introduce yourself?
Sounds good.
Okay, excellent. So I am Charlene Williams. I'm with Real Estate Homeward. I am a broker and I've been in the industry for 15 years. And with me today is the lovely Amanda Pivar.
Yeah. So my name is Amanda Pivar. I'm a mortgage agent and I have been one for over 8 years. So I have lots of experience in the industry to look at different options when rates are up like they are now.
Excellent. So, Amanda, you sent me an email today. I reviewed it, but still lots of questions. What are our options?
Yeah, so there's a couple options for buyers out there to maximize their qualification. So my email today basically had my three favorite tips on how to maximize your qualifications. So my first tip was increasing your term. So right now, a lot of clients are going for that 3-year fix, kind of enough time to weather the storm higher rates, but be up for renewal when rates should be a little bit better. Now, no one has a crystal ball. We don't know exactly what rates will do. And the 3-year actually is a lot higher than it has been in the last couple of weeks. So they now have options of a 4 or 5-year term that offers much lower rates, which is great for the stress test. So with the stress test, we have to qualify rates on rate plus 2%. So when you're able to qualify someone on 0.6% lower by going with a 4 or 5-year, we're really seeing those affordabilities go up quite a bit.
That's great. So in the end, it's still an opportunity for first-time buyers.
Absolutely. I think any first-time home buyers who are sitting on the fence right now, they need to remember that a rate is not going to last forever. We're just in a weird environment, but that investment you make in real estate actually will last forever. Whether it be getting into your first property and selling it and buying another one, you're building equity, you're building wealth. That is going to last you longer and be more beneficial down the road than a slightly higher rate for a couple of years.
Right. So the other opportunity is looking into a credit union, you said?
Absolutely. So I think people always forget that credit unions are provincially regulated, meaning they don't have to always follow the stress test. Yes, they do for high ratio mortgage because that's under CMHC. But for any of my clients with 20% or more down payment, we actually have the option of qualifying at contract rate with certain lenders like Meridian or Duca. Now the rate is slightly higher, but the qualifying rate is 1.67% lower at the moment. That's huge. That is a big difference in maximizing somebody's affordability. So it is another really good option to kind of weather the storm of these higher rates by still being able to purchase a property that again will build you long-term wealth.
Right. So you have to have 20%
You
down.
do, yeah. So anything less than
Okay.
20% down payment always has to follow the CMHC guidelines.
Okay. So what's your third-ish option?
Yeah, so my third option is going with some of the lenders that will use extended ratios. So we have two lenders in particular that actually will go up to a 45-50 ratio, which is a lot higher than what the typical is. And they only charge a small premium, which is at the current moment 0.2% higher, which really in the big grand scheme of things is maybe costing someone $20 a month. But this option will allow somebody to have extended ratios, which is great for someone who might be self-employed, have some liabilities they don't want to pay off, but want to look at ways of maximizing affordability. And we only actually have two lenders, and they're not a B lender, they are actually a bank lender.
Oh, an A-lender. That's great.
Yeah, so no lending fees, which is always good.
Yeah. I mean, every little bit helps at this point in time. We know that there are people out there that are like, oh, the sky is falling. The interest rate has gone up again. It was unexpected. Like I didn't expect it, and I work in the industry. I thought they were holding for the next little while and then it would go down. We're in June already. Do you know when the next announcement is coming?
It's sometime in July will be the next announcement.
Okay. Typically it's like a month apart, so maybe like the 13th, 14th of July, right?
So it's usually
Okay.
dates for that one, and then we'll have a long pause until the fall.
Wow. Ugh. I hope it's a long pause, but I mean, are we expecting it to go up anymore? What's your prediction? I know that we don't have crystal balls.
No crystal ball here. I mean, I think the one thing that's important to remember that when they raise the rate like they did a couple of weeks ago, it does take a couple of months to actually reflect if it's working or not. Do I think that that couple months is actually going to make a decision for the Bank of Canada? No, I think if they think they're going to raise it, we potentially will see it in July. They really want to get ahead of inflation. And as much as it's not fun for any of us right now, in the long term, it's only going to benefit us. They need to get in front of inflation so that in a year from now, we're not paying $20 for milk. That's definitely a bit of an over exaggeration, but you see the picture. So I do think they maybe will be aggressive one more time, whether it's going to be in July or September. We're just gonna have to wait and see. And I hope
Okay.
I'm wrong. I will put that out there, but that's
I
fine.
mean, I kind of hope you are too, Amanda,
I know.
because I'm still working with a variable and it's killing me every time they go up in rate. So, and yeah, I guess that's it. Thank you so much for all of this information, Amanda. I'm pretty sure people out there that are watching like appreciate, the layman's terms that you use, which is why I like talking to you, because whether I understand it or not, you put it in layman's terms and you're able to repeat it, which helps me out a lot because I just want to sell houses. That's all I
Yeah.
want to do.
And I
Yeah,
think financial literacy is not something that is taught in school. So it's not
right.
something in our adult year that should be complicated. It should be very simple and straightforward. So I'm happy to do that for you.
We appreciate it. Thank you, Amanda.
So how is the pre-con market? I am seeing cranes, cranes, and more cranes. So what
Oh
are you
my
seeing?
God. Yeah, there's gonna be a lot. There's gonna be a lot of cranes. I think they've got somewhere in the 80s towers approved for Pickering alone. Um 43 have been definitely approved. The rest are in before council. That is going to be a huge build over there in Pickering. I mean, we need it. We need housing.
Yep.
The two that I'm working on now is still Lake Point at Quinte Bay. No, not Quinte Bay, Discovery Bay. I'm doing that project and I'm also doing Highmark. And we are seeing a lot of end users. They're not just for investors in Durham anymore. So that is also a good thing. And I'm looking forward to it.
I think it's a good opportunity for end users as well, because for the last few years, foreign investment's been massive and they've been coming in and buying up floors actually, in fact, and
Yeah.
financially it made a lot of sense compared to what they were able to purchase back home. But now we don't have that foreign investment. So it is a great opportunity for end users to actually buy that retirement condo, that investment property, or that
Yes.
forever home.
Oh yeah, absolutely. There's a lot of opportunity out there. Resale, we're still seeing multiple offers, especially in Durham. Places are just going crazy. And you mentioned before we started our recording that rents were up 27% in the GTA. That's huge. That means we're talking 4 or 5 days on the market. They're not even waiting till the weekend when people can actually get out and see the properties. They're, listed on Monday. They're gone by Friday. That's just crazy.
Yeah, unfortunately, I don't think it's going to change because immigration is such a huge thing right now in Ontario, and that's not going to change anytime soon, which is great on so many levels. Housing is just needs to catch up.
Yeah, exactly. 400,000 a year over the next 5 years. That's very it's a lot of people and most of them want to settle in the GTA and we're getting all of it. So
And I think we're also still seeing, and correct me if I'm wrong, with bidding wars.
oh yeah, definitely bidding wars. It's in and around the GTA for sure. I can say clearly 6 months ago, even in Leslieville and the beaches, there were a few, and where you would see 3 or 4 offers. Now you're talking 7, 8 offers on one property. I was in an offer presentation just last week that had 15 offers and went for, yeah, it went for, uh, it was listed for 1.6, it went for 2.3.
Wow. I
I
think
know.
the market is back.
It is. It's back with a vengeance, and anyway, so yeah, it's great. Well, we'll see what happens.
Yeah, absolutely. Well, thanks for having me on to chat again, Charlene. I really appreciate it. Anytime you want my mortgage expertise, please don't hesitate to ask.
Oh, of course I will be asking. Thanks a lot, Amanda. Thanks for joining me.